Hi, I'm Gio, and welcome to Renewable Energy Investments. On this channel, we'll take a close look at some of the most popular and potentially most profitable publicly traded renewable energy companies. We'll explore product roadmaps, market opportunity, valuations, profitability, and more. I chose to focus a considerable portion of my portfolio on renewable energy because I believe the renewable energy industry and many of the companies therein have a bright future. With a fast-growing market, products sitting atop declining cost curves, exciting technological innovation, an environmentally conscious population, and even government incentives, there are plenty of tailwinds to power renewable energy company profits going forward. Full disclosure, I am not a financial advisor, and this channel does not give financial advice. Instead, by sharing my research and opinions, hopefully we can all learn something and add some wonderful companies to our radar. So why am I bullish on renewable energy? Let's take a closer look. The increase in demand for energy. The global demand for energy will increase as the Earth's population grows. It will increase as underdeveloped countries continue to emerge. It will grow as a result of the inevitable shift in the global transportation fleet from internal combustion engines to battery electric vehicles. What effect will global warming and climate change have on energy required for heating and air conditioning? What about the energy required to power factory automation, artificial intelligence, data centers, cryptocurrency mining, and other blossoming energy-intensive operations? To make sense of all this, let's take a look at some recent energy consumption projections. The U.S. Energy Information Administration projects a nearly 50% increase in global energy use by 2050. In the U.S. alone, it projects a compounded annual growth rate to hover around 1% during this time. The shift of energy generation from coal, oil, and nuclear to renewables and natural gas. This is where the projections really start to get interesting. The U.S. Energy Information Administration projects that generation from renewable sources will rise from 18% of total generation in 2018 to become the largest source of generation at 38% by 2050. Solar is the fastest growing source of renewable energy, increasing from 13% of total renewable generation in 2018 to 46% by 2050. Although onshore wind generation more than doubles during the projection period, its share of renewable generation declines slightly from 37% to 33% in 2018 and 2050. Long-term trends in electricity generation in the U.S. are dominated by solar and natural gas additions, with wind also playing a substantial role. Coal, nuclear, and less efficient natural gas generators will be retired, while renewable energy projections will ramp up. From an international perspective, it's the same story. Let's take a look at projections for the two main technologies powering the shift to renewable energy generation: solar panels and wind turbines. Solar panels. According to the International Renewable Energy Agency, or IRENA, global solar capacity is expected to grow sixfold from the 2018 levels of 480 gigawatts to 2,840 gigawatts in 2030, and almost 18-fold to 8,519 gigawatts in 2050, with a compounded annual growth rate of nearly 9% during this time. Meanwhile, annual global solar additions are expected to grow almost threefold from 94 gigawatts in 2018 to 270 gigawatts in 2030. And almost fourfold to 372 gigawatts in 2050. Wind turbines. Compared to 2018 levels of 542 gigawatts, IRENA projects global onshore wind capacity to grow threefold by 2030 to 1,787 gigawatts and almost tenfold by 2050 to 5,044 gigawatts, with a compounded annual growth rate of 7.2% during this time. Meanwhile, global offshore wind capacity is expected to grow almost tenfold from 23 gigawatts in 2018 to 228 gigawatts in 2030, and a whopping 43-fold to 1,000 gigawatts in 2050, with a compounded annual growth rate of 11.5% during this time. Cost competitiveness on declining cost curves. Wright's law provides that for every cumulative doubling in the number of a product produced, manufacturers realized a consistent cost decline in percentage terms. Economies of scale deliver marginal cost reductions for every additional unit produced. Similarly, as production volumes increase, so does the incentive for innovation, as even minor improvements to product design or manufacturing can have enormous impacts on the company's bottom line when enjoyed by every unit of production. Translation: the huge growth in renewables sector will result in massive cost declines. According to IRENA, the installation cost of solar projects globally will continue to decline dramatically in the next 3 decades, averaging in the range of $340 to $834 per kilowatt in 2030 and $165 to $481 per kilowatt by 2050, compared to the average of $1,210 in 2018. These declining costs are especially interesting when considering that the levelized cost of electricity for solar is already competitive with all fossil fuel generating sources. Unfortunately for the fossil fuel industry, this will not last very long, as within the next 5 to 10 years, solar will be more cost effective than fossil fuels. And it's the same story when comparing onshore wind energy to fossil fuels. Fossil fuels are done. By 2025, the U.S. Energy Information Administration projects that coal and nuclear energy builds will no longer be economically attractive. Solar and natural gas will be the most economically competitive technologies and will maintain this competitive position through 2050, while wind will become cost competitive in nearly half of the regions in the U.S. over time. Keep in mind, renewable energy is even more compelling in certain remote locations which must incur high transportation costs to obtain fossil fuels. For instance, Hawaii, which doesn't produce any coal or natural gas itself, is forced to pay a substantial shipping and transportation premium for fossil fuels. As a result, on-site renewable energy generation and storage enjoys an organic competitive advantage. Technological innovation. With an expanding market share up for grabs in a world where lower energy costs translate into higher margins, innovation to obtain the most efficient methods of producing and storing energy is the name of the game. Upcoming wind technology innovation, including larger capacity turbines, increased hub heights, and rotor diameters, will improve energy yields and reduce capital and operating costs. IRENA provides further color as to timing and importance of offshore wind technology innovations over the next 20 years, which include next-generation turbines, floating foundations, and improved blade design and manufacturing, among other things. The solar innovation pipeline is perhaps even more enticing. Crystalline silicon panels currently account for 95% of worldwide solar production. The average module efficiency in 2006 was around 14%, and has since increased steadily, reaching about 18%. This positive trend is expected to continue through 2030. PERC cells are not much different in construction from a typical monocrystalline PV cell. However, the key improvement is that the integration of a back surface passivation layer, which is a layer of material on the back of the cell that is able to improve cell efficiency. Tandem solar cells are stacks of individual cells, one on top of the other, that each selectively convert a specific band of light into electrical energy, leaving the remaining light to be absorbed and converted to electricity in the cell below. The tandem cell approach has been used to fabricate the world's most efficient solar cells that can convert around 46% of sunlight to electricity, but they are too expensive to break into the market. Thin film technologies can be cheaper to produce, but they historically have had low efficiency levels. Thin film technology accounts for only 5% of the global solar PV market. One of the most promising materials is perovskites. It's a type of mineral very good at absorbing light and now can convert around 25% of sunlight into electricity. However, because the crystals dissolve easily, they are not able to handle humid conditions and need to be protected by moisture through encapsulation. Also, scientists have not been able to replicate the 25% efficiency to cover large areas. If these barriers can be overcome, perovskite cells have the potential to change the dynamics and economics of solar power because they are cheaper to produce than solar cells. What about battery innovation? Today, most electricity grids have virtually no method of storing excess energy. The minimal storage facilities that do exist typically use pumped hydropower, essentially pumping water uphill into a reservoir when excess electricity is available, and allowing the water to flow back downhill when needed to generate electricity. These systems are not sophisticated enough to manage today's ever-growing and ever-evolving grid. Enter the emergence of utility-scale batteries. By storing massive amounts of renewable energy, such batteries will essentially replace peaker plants while stabilizing the energy supply when wind and sun energy are less prevalent. Mix in a bit of software and artificial intelligence designed to optimize the storage and deployment of such energy, and the result is substantially more efficient energy generating systems. At the household level, smaller battery packs will provide a backup energy supply in the event of blackouts, while allowing homeowners to capitalize on energy rate arbitrage by minimizing electricity draws from the grid during peak demand hours. Improvements in battery cell chemistry, manufacturing processes, and even the rumored solid-state battery are all on the horizon. This will cause massive gains in battery uses, capacity, density, longevity, safety, and cost. Government incentives. Concerns about climate change, air pollution, energy security, and energy access, along with the volatile oil prices in recent decades, have led governments to acknowledge the need to produce and use alternative, low-carbon technology options such as renewables. Enter government incentives. In the U.S., both federal and state governments create strong financial incentives to encourage businesses to invest in renewable energy. At the U.S. federal level, incentives include the Renewable Electricity Production Tax Credit and the Investment Tax Credit. The Renewable Electricity Production Tax Credit provides qualifying companies producing wind electricity with a federal tax credit equal to 1.5 cents per kilowatt hour during the 10-year period after the date on which the wind project is placed into service. It was recently extended to cover wind projects that begin construction during 2020. The Energy Investment Credit provides a federal tax credit for solar commercial and residential projects through 2021, equal to 26% of the cost basis of the solar project. Keep in mind 2020 is an election year. At this point, the transition to renewable energy is happening with or without government incentives. It's just good economics. However, if a certain administration takes office, it seems very likely that we could expect an extension of or increase in government incentives. This would be great news for the renewable energy industry and could accelerate the return on investment of a renewable energy portfolio. At the end of the day, our dollar is our vote. Most people value a clean earth and would rather pay less for energy than more. This truth will win out. Inevitably, clean and renewable energy will become the predominant source of energy. It's simply a matter of time. As the shift to renewables accelerates, investors with a multi-year time horizon who grab a piece of the most promising companies could be handsomely rewarded. P.S. If you got value from this video, please smash the thumbs up button to show your support and post your thoughts in the comments below. I read every comment and would love to hear your opinion. In future videos, we'll dive into companies and I'll let you know if I am a shareholder or if I plan to become one. Feel free to subscribe to this channel and follow along.